KENS 5 Eyewitness News Sunday starts now.
A lot more to come here on Eyewitness News Sunday morning. Student loan interest rates have doubled just this week. We're going to talk with a financial advisor about what you and your college students need to know. Welcome back. Congress failed to stop an increase in the student loan interest rate, and as a result, 7 million college kids will be doling out thousands of more dollars. Here with us now is Brooklyn, Chandler, Willy with the Texas Financial Advisory. Thank you so much for joining us this morning.
Thanks for having me.
Let's talk a little bit about, I had a little bit of this because my son is now going to college, and we talked about those Stafford loans, and what a jump. What's going on? What's fueling it?
Well, it just was scheduled to happen, and Congress is in gridlock as usual. They could have, but they went on vacation, and here we are. But you know, in a way, this is good because it's raising awareness, and student loans is going to be the next crisis that we're going to see, just like the mortgage crisis was. Well,
some were telling me that if you look at it over the length of that 10-year loan that you may be taking out, you're looking at an extra $5,000 or more?
About that, depending on how much you take out. The most you can take out a year is $23,000 for these type of loans, and so yeah, over 10 years, you're going to see about $5,000 more in interest on those loans.
Is it just student loans, or did what Congress did not do affect other loans as well?
It's just these subsidized loans.
Okay.
Unsubsidized loans, those rates have been at, almost 7% since about 2007.
And so the other loan was another one that you thought, oh, this would be great. It's around 3.5.
Yeah, much
and now
lower.
It's jumped up to rival the other rate.
And now Congress could come back and they can make this retroactive and change things. But the point is now people are starting to realize what an issue student debt is becoming within our economy.
It is. And how big an issue is it? Can we give a number to it? Is
right?
it huge? Yeah.
Well, think about this. That's money that our students are having to pay back month after month. That's not being poured into our economy. That's $300-400 a month, maybe more, depending on the school you chose to go to. Making a car payment, that would help our economy more. People are delaying getting married, starting families, buying homes.
Sure, because they got that debt.
They've got that debt hanging over them when they come out of college.
Well, for those families now that are looking at it with school just a month or so away, a couple months away, I'm looking at going, do I take out the loan? Does he take out the loan? What is the best way, and what would you advise folks to do?
Every situation is different, but I'd rather you take out the loan than to pull from, say, your retirement account or stop contributing to your own retirement account. It's much better to go ahead and take the loan, whether you take it under your name, the student's name. It just depends on the family situation.
What about those folks who already have those loans that are out there? Do they just jump up suddenly to them, or they fixed it?
Yeah, you're safe if you have those loans out already. It's just for those for this next school year. So anyone in undergraduate, graduate school taking out loans for next year, which, like you said, 7 million students.
Looking at it going, wow. Yeah. What do you tell them that are struggling, maybe with the loan repayments and whatnot? What do you tell a student? Well,
there are options, but I think that the key is to start at the very beginning and look at how much you're going to take out and what your career is that's going to pay for that. So that's key, that you've got to have realistic expectations here. Look at alternative ways to paying back the loans. There are some programs out there that say you, as a teacher, you could get loan forgiveness if you work with a low-income school. If you're a physician or a physician assistant, those type of programs, if you work for a government-assisted program, you might be able to get loan forgiveness or grants after the fact.
That's interesting. So, and for the kids who are going through school right now, it might behoove them to look forward and say, hey, maybe this might be a better career choice because I'm going to be saddled with some student debt, and this is not going to be able to pay it back for me.
Right. Or, do those extra courses your senior year of college. Attend the summer schools at community colleges. There are affordable ways to get your education, but I think what students don't do is sit back at the beginning and go, what am I going to look at, and realistically, what kind of job am I going to receive that's going to help me pay for this debt?
So it has an impact, I guess, on their graduation as well.
Definitely, but we're seeing an impact on retirement. I don't know if you know this or not. I mean, there's over 2 million folks over the age of 60
looking for jobs.
No, with student debt.
Oh my gosh,
Isn't
really?
That crazy?
Still?
Yes, and get this. Okay, 120,000 Social Security benefactors receiving Social Security actually are being garnished to pay for.
So they get their Social Security, and the government's taking some of it back out to pay
the student loans that are in deferment. So this is you know, this isn't just our folks in their 20s. I mean, this is across the board. This is a taxpayer issue. You know,
it's kind of interesting because in news we talk about credit card debt as being such a big deal, but it looks like student
loans surpassed it now at this point. Over $1 trillion in student loan debt.
Thank you so much for joining us.
Thanks for
great points for us and a lot for us to look forward to as we try to approach this school year with our wallets still intact. You are watching KENS 5.